Hi, folks. Whoa, it's been a rough couple of weeks. I've had every kind of technical problem you can imagine. I've been trying to get this word out to you for a long time now, and here we are. Where we are, in my opinion, is we're at the tipping point of all tipping points. What's going on in Venezuela is bigger than you can imagine. We're going to be talking about that in a couple of weeks. But right now, what everybody's telling me they want to hear is about the financial collapse, about, I should say, the financial reset, about what you do to prepare for it, where you put your money, and how you not only get through this, but you prosper it. And that's what we're going to talk about today. This is going to be two parts here, and one part today and one part tomorrow on your customized financial reset. But there's several more parts to this presentation, and I need you to understand that just finding out where to put your money does not solve the problem. We'll go to this next slide, and I'll show you what we're going to be doing from now into early next year, all related to finances, customizing your financial strategy. Let's go on down, and I'm going to tell you what we're doing. All right, let's freeze right here. I'm jumping down to number 3, customizing your financial strategy. Why? Because people have been asking for that. But we're going to go back next week and we're going to start from the beginning, taking advantage of the financial reset, Trump's Make America Great agenda. And then we're going to redo the customizing your financial strategy for those who might have missed it. And then we're going on down. These are week by week requirements for the coming currency reset. That means the dollars, the currency, and when it resets, implementation of the SARA. I've done those 2 shows before, but they need to be done again in this sequence. Restoring America's greatness, crucial. We've gone through a total, almost literal collapse of the United States. We need to understand what made it great and how we restored it and how we keep it. And then we also need to understand that as we come out of this reset, there's going to be a total geopolitical restructuring and realignment. And if we don't understand it, then we're in real trouble. And lastly, understanding the banking debt trap. This is why, how did we get in this situation in the first place? Because if we don't understand that, then this cycle will just repeat like all the other cycles. So with that, let's go to the next slide. And I'm going to give you some background before we actually delve into this slide. So who am I, for those who might not be following? I'm just a guy, just like you. I just happen to have had a near-death experience in 1968. And for the last 57 years, I've been doing research. God told me that when everything was on the tipping point, that he would bring me out and my platform would explode. I think we're right there right now. And what am I doing a financial piece when I'm not a financial expert? So just please pay attention to this. I'm just going to give you the guidelines. You're going to have to go do your own homework as to what you do with the information I'm giving you. I'm not a financial advisor. I'm not a hedge funds manager. I'm not anything special except a researcher. And where is the information coming from that I'm giving you? God told me everything is in history. So what I'm doing is going back and looking at all of the financial collapses, all the way back to the Dutch, to the Spanish, to the British, to us, to right now. And I'm looking at experts of the day. I'm looking at Ray Dalio, the #1 hedge fund manager in the entire country, and Warren Buffett, who's been probably the #1 investor in the last 2 decades. And I'm listening to what they're saying, and then I'm tying it all together with the things that God shows me in my quiet time at 5 o'clock in the morning. So that's my credentials. It's not that I'm some financial guru. I'm an historian. I'm an analyst. And what God always told me is when the time comes, you will have the information you need to tie all the pieces together to make the puzzle complete so that people can see everything from the 60,000-foot view and understand exactly what to do. So with that said, let's get into this. Get a pencil and paper out, get your camera out, get ready to do screenshots, whatever you need to do. This is a deep teaching, and I'm going to go slow through it. And please take notes, because this is really what you've been asking for: how to prosper from the reset. So you got to lay a foundation in everything you do. You've got to prepare. So the first thing you got to do is get out of debt. And then you've got to have cash to take advantage of what's coming. Now, you don't want to be heavily in money, so we'll get into that, but you have to have some kind of an emergency fund invested in some kind of a liquid or semi-liquid asset that you can move around to take advantage when the collapse really, really starts to happen, and diversify your assets. So we're going to be talking in this about all the various places that you can put your money. And in part two of this, we're going to be talking about something very, very significant. Basically, part one is preparing. Part two is executing. So it's not just enough to know where to put your money. It's important that you know how and when and where to put it. And going on down, getting out of the dollar denomination assets. We're going to have a collapse of the bond market. Basically, that's thanks to what's happening in the BRICS and thanks to the $38 trillion national debt that's been heaped upon us by the global financial elite. The dollar is losing value. We did a show recently on the home values and how in 2000, the average cost of a house in America was $200,000, and the interest rates were 3%. And now, just a short time later, the average cost of a house is $420,000, and interest rates are 7%. So basically, that kind of a jump in the value of things, that house didn't go up, the dollar went down. And so as that kind of catastrophic thing happens, the world is looking at America and saying, your dollar is getting more and more and more worthless. And it is. And so that's why we're going to have the reset. Liquidity allows you to buy when others sell. You have to have a strategy for what you're going to do. You have to have the money prepared. You have to have a list of what you want to invest in. We're going to go through all of that. And then I'm going to encourage you, when you're finished with this presentation, I want you to go do your own research. So you're not taking my advice. You're just taking what I've given you as a foundation of knowledge. And then you have to do some work because it's your money, not my money. Know what you want to buy and at what price. So in other words, let's take stocks. In the 1929 crash, over a 3-year period, stocks fell 90%. Real estate prices dropped to the floor. So people who were properly positioned were able to go in, and you have to have nerves of steel, which means you have to have a plan and you have to execute it. So as stocks go down, and they will in this collapse, here's what you do. Let's just take an example. You see your favorite stocks that you believe are ironclad stocks. They drop 20 or 30%, buy. And then when they drop another 10 or 20%, buy more. And just keep following that strategy until you hit the bottom. Don't wait for the bottom. Cost average in to what you're buying to protect yourself. All right, so let's go on down. Cash purchases only. Liquidity may be great when you're blowing up the bubble, but it is the kiss of death during a financial collapse. So whatever assets you buy, whatever you put your money in, pay cash. Cash is king in this kind of a situation. Buy high quality assets for pennies on the dollar. That's what you're going to be able to do if you follow this strategy. Let's go on down, and we're going to break this down. I'm going to tell you some things to buy, but I'm also going to tell you some things not to buy. So let's go to the stock market and find out what you don't want to buy. These are all assets. Anything I'm telling you here is just common sense and research. Is all it is. Any of you could have done this if you just had a few thousand hours to invest like I have. So what do you want to not invest in? Unprofitable technology stocks. Why? Because they're emotionally driven. They're way, way overvalued. And most of the technology stocks don't have good cash flow, and they're not really safe, secure investments. So if you're in them, get out of them. And next down, you've got the commercial real estate market. It is absolutely going to have a catastrophic collapse, probably as much as 90%. Why? Because of what's happened since COVID. Basically, we've left the office complexes and gone out to work from our homes, and we're never, ever, ever going back. And you've got vacancies levels of 30, 40, 50%, and you've got leases that are expiring. Most commercial leases are usually a minimum of 10 years. They're coming up for renewal, and they're going to be at much higher rates. So you're going to see a catastrophic collapse in commercial real estate. So if you're invested in something that's invested in commercial real estate, My advice is do your homework, but consider getting out of it. Over leveraged companies. So what am I talking about there? I'm talking about things that have structural difficulties that are going to cause them long-term problems. So think of shopping centers. They're under pressure because of what? Because of online buying, but they're under greater pressure because of something else. Because this debt that we have of $38 trillion and all the taxes that have been heaped upon us have made the American population, the lower income and the middle class population, in a position where all they can do is buy necessities. They can't buy any luxuries hardly at all. And so there's all kinds of really good companies out there that are in the retail market that are suffering because there's no demand for luxuries. So you need to not invest in commercial real estate property and shopping centers. I just lost my point of view here. So I guess that takes care of the real estate market as far as commercial is. What about residential? I'm going to cover that in a different slide. It's going to have a different trajectory than residential. So basically, let's move on. Specific meme stocks. Now, what am I talking about here? I meant to say speculative meme stocks. Basically, one example that was in the news was that huge uptick and that huge crash on GameStop. Think about AMC theaters. They basically are under siege because of what? Because of streaming. Think of the crypto market. A lot of people made millions in past crypto markets, but now think, what is it we really need to understand? We need to understand that those are really casino bets where some big billionaire puts a lot of money in, drives that stock up, and then pulls it out, and you get left holding the bag. So if you're not invested in an ISO 2 2022 compliant crypto with utility, i.e. especially XRP, then I would advise you to do your homework, consider getting out of cryptocurrency, because it and the exchanges that support them are going to have a catastrophic collapse, as well as the mining corporations that mine those crypto stocks. Because what? They're speculative and they're emotional driven and they have no utility whatsoever. So it's only the ISO 2 2022 compliancy cryptos that you want to be looking at. And then something that may seem like it's controversial and the exact opposite of what you may think, but a lot of the smaller banks are heavily invested in localized regional commercial real estate, making their portfolios very vulnerable. So you need to look into the assets of your own bank. If you're in a small regional bank, it may be a high risk to keep your money in that bank. And don't think you're protected because of the Federal Discount Insurance Agency. Basically, the FDIC is not a government agency. It's owned by the global financial elite, the very people who have enslaved us with their central banking system. And if you go back to the 2008 financial collapse, guess what? A few banks failed. It wasn't catastrophic, but they didn't have the money. They've only got about 1% of the assets that they insure on hand. And so if you think you're going to be in a small bank and you're going to be protected because of the FDIC, think again. So go do your homework, find out if your bank meets the criteria to be stable. Let's go on down and talk about stocks. And I've got to give you a caveat here. Of anything that I'm going to talk about, I know least about stocks. This is coming from research. I basically have invested most of my money in gold, in silver, in XRP, and in real estate. So I'm just going to read this to you. This is coming from the absolute most informed people on the planet. So investment indicators. You want to invest in the stock market as it collapses. Not before, as it collapses. If anything, right now, you want to be getting out of any stock that doesn't meet the description that I'm going to be reading here. So you want to get out of any company that doesn't meet these requirements. Companies that have low debt are companies you want to invest in, that have strong balance sheets, a signal to invest, strong cash flow, solve real world problems, are not dependent on cheap money, are market leaders, have high productivity, products that are what? The necessities. Companies that are solvent, that are able to buy weaker companies and attract talent from them. So what are we talking about? We're talking about the cream of the cream. Any stock you have that doesn't meet that criteria as a stock, you probably want to consider divesting yourself of right now, because the stock market is going to take a significant collapse, but it's also going to create unbelievable opportunities. So going down, avoid stock in tech companies. Many of them depend on cheap money. People are pouring money in emotionally, and they have weak balance sheets. And this next part is basically something that I believe in. I believe as the truth comes out, as whistleblowers come, we're going to see the corporations and the categories of corporations that have enslaved us. And I think I'm already seeing that. When that happens, their stocks fall dramatically. So this is, just take it for what it's worth. I say that the pharmaceutical stocks are going to take a hit. The outlets of any companies that push the LGBT movement and the DEI movement are going to take a hit. And basically, if they're disclosed by whistleblowers, so let's give you a couple examples of what I'm talking about. Target had their rainbow collection of clothes, and they lost $12 billion. Anheuser-Busch was forced by the global financial elite to put a picture of a transvestite on their beer can, and they lost, I think it was $27 billion. So just take that for what it's worth. I think the American people are waking up, and they're saying we've had enough of this. We're not going to allow our family to be destroyed. We're not going to be allowed our morality to be destroyed. We're going to go back to the nation that made us great, which was based on the family, on patriotism, on Christianity, and on moral values. And anything that doesn't fit that criteria is something you don't want to be invested in. So liquidate any stocks that don't match the profile that I've outlined for you above. And here's the key to this: timing's everything. Come back in after the market crashes. So as you see these stocks go down 20, 30%, buy. They go down another 20 or 30%, buy. Don't get weak-kneed. Understand, you did your homework. You know what's happening. You know the stocks that are sound, that are not going to go off the boards, and you can take advantage of picking them up at some point for 30, 40, 50, 60, 70, 80, maybe in 90% discounts. And that will build generational wealth for you. Let's go on down to the next slide. And now we're going to talk more about real estate. And the commercial collapse is going to be catastrophic. Like I said, maybe as much as 80 or 90%. The whole profile governing commercial real estate has changed, because now people don't have to go to those offices, and it's not going to reverse. So let's go on down and we'll talk about commercial shopping centers, because that's also affected too. I talked about it a minute ago. It has to do with the simple fact that perfectly good companies are having difficulties. Not a whole lot of them are actually declaring bankruptcy, though some have, but they're declaring that they're going to have massive store closures. So let's get into it and see what this is all about. Quality real estate with income is what you want to invest in, as, not before, but as the market goes down, as the prices drop dramatically. In cities with strong, diverse economies, diversity is a very important indicator of where you should put your money. Good schools and low crime. Schools are an absolute driver for the value of real estate. You could have two homes, one in one community and the other in the adjacent community. And if one was in a school district that was substantially better, you better bet your bippy that it's going to sell appreciably more than the one with the bad school system. Take advantage of storage and shortages in the residential home market. So what have we got? I'm going to be doing entire shows on this. We've got a real estate market that it's like nothing I've ever seen. I need you to understand what they have done. So basically, there's two things that they've been doing. They're setting up for another collapse, just like they did in 08. In 08, you could, for the first time in history, buy a house with no money down, no income verification. Those were the subprime loans, and they're on ARMs. And that means that at the expiration of that ARM, those rates go up, and they grow up dramatically. And that's what left all those people in financial ruin, having their houses taken from them. They're not doing quite the same thing this time, but there's some some stuff afoot that you need to be aware of. So this time they're going with Fannie and Freddie, and they're basically taking loans that were 3%, that were on an arm, and many of them have actually defaulted, but the banks want to pick the time when they pop the bubble. So they've been carrying those defaulted loans. Isn't that interesting? So basically, the real estate market, both commercial and residential, is under pressure. So we're going to talk in another segment about why and how the millennial generation and the Generation C can't buy a house. So I'm going to break it down just a little bit for you here. Here's what they're doing. They've gone into collusion with the builders, with Pulte and Lanier and a number of the really big builders that build a large number of the first-time homebuyer homes. And what they're doing is letting multi-billion-dollar contracts out to build houses, to build lots and lots of houses, because they know there's a shortage. But what Schwab say? He says basically, you will own a home and you will not own a home. You will nothing and you will be happy. So what they're doing is they're destroying communities because they're coming in and building huge projects that are for rent only. And when you have a community that is primarily a rent-only community, you've lost the continuity of the community. It becomes transient. The school systems go down. It disrupts the rhythm and the value of the community. So we're going to be talking about how we can change that, because we need to get homes for the younger generation, and we will. Stay away from vacation homes. Think about it, folks. You get yourself a financial difficulty and you own more than one home, you're going to try to protect your primary residence. So you definitely want to stay away from vacation homes. Real estate isn't liquid. You need to understand this. Real estate investment in a crash like this is not for everyone. This is real estate investing in an environment like this is for people with deep pockets. And just like those major corporations that are controlling the real estate market, if you're going to play in real estate in this market, you want to come in cash only. This is not a time to buy a real estate property and leverage it. So basically, you want to pay cash only if you're going to invest in real estate. And we'll get into that a little deeper in another slide. And now we'll go back a little bit on the commercial real estate again. I'll give you a couple of tidbits. Avoid commercial real estate at all costs. It will suffer a catastrophic collapse, and massive vacancy rates and defaults will occur. And so basically, just get out of it and stay out of it. Residential will fall, but not nearly as much as commercial. Let's go on down to the next slide. And now we're going to get into something that everybody's kind of aware of, and that's the precious metals. But not all precious metals are the same. So right now, reason I really wanted this to be part 3 instead of part 1 is because of this metal section here. I needed you to understand some things. So we're going to have to go back and lay some groundwork so that you can understand the metals department a little bit better and understand what Donald Trump is doing to basically create stability. What's happened in every collapse in the past. Now I'm coming back from history with this, is they drive up, they create a bubble, they put us under fiat currency, they drive us into the point where we're at right now where we can't afford anything. They collapse the bubble, we suffer, we lose our homes and our assets, and they don't do anything to fix it. And then they just repeat the process over. So that's why we need to go back and understand what Donald Trump is doing. Donald Trump is avoiding a total bankruptcy for the United States of America. He has a very sophisticated strategy that is creating a soft collapse for the United States of America. Then he has a parallel strategy to quickly rebuild America and restore America to the prowess that it had before. We're not going to come out of this as the sole reserve currency of the world. We're not going to come out of it as the number one only global power. We're going to have a total change in the entire dynamics of the world. And what you're going to see is the power blocks within the world are going to be the United States of America first, Russia, and China. And the EU will be talking about this. The EU has allowed their nation to be taken over by Muslims, and they're invoking Sharia law. They have other issues like energy, etc. So the EU is becoming relatively downgraded to a second-class nation. So we'll talk about that in more detail as we go through. But anyway, what you need to understand here is that Donald Trump is going to do what's been done in every collapse in the past. So let's go to 1929. We're 3 years into it. It's 1933, and the United States is effectively bankrupt. And what happens? Basically, we have an asset called gold. It's on the books at $22 and change. And they revalue it. They call it in, and they revalue it to $35. That's a 69% increase in the value. Why do they do that? Was it an accident that gold was on the books at $22? No. They always do that. It's preparation for the reset. They have to have an asset that they can revalue so they can change the dynamic and the opinion of the people in the market. So what that did is over about a 3-year period, by revaluing gold, they were able to lower the GDP to debt ratio from, I think it was 45% to 25%. I've got that in another slide presentation. I'm pulling that out of the top of my head, so maybe I'm not quite right on it. But anyway, what's Trump doing? He's declared that he's going to create a strategic reserve. He's going to take gold to $20,000. He's going to use the powers that were given him when he basically declared martial law, and he is taking money. Listen to this. This takes us in to the financial reset that God is orchestrating. All that Bitcoin that he has, didn't buy a penny of it. It was all confiscated from the people who are our enemy, the people who've been trying to commit a coup against the United States of America. And he has a plan to not buy additional Bitcoin, but to covertly get additional Bitcoin by taking it from people who are involved in illicit activities and by mining as well. Eric on the show recently announced that they're mining Bitcoin for 50 cents on the dollar. So his goal is what? To get 1 million Bitcoin, and then to revalue that at $1 million per coin. You put those two together, and that gives us $6.2 trillion that we can use to offset the national debt. And then through the same strategy that happened in 29, we basically reduce the debt to GDP ratio, and all of a sudden America looks like a better investment. There's a third piece to his strategic strategy, and that is XRP, because he knows full well that we're going away from fiat currency and we're going to a system that is going to be backed by crypto, by ISO 2 2022 compliant currencies, and we're going into a digital environment. That's too involved to get in right here. So that's why I've got this 8-part show, and we'll be talking about that in more detail. Now, back to gold. So I have only one caveat on gold, and this is just my personal opinion. There's lots of people out there who know a lot more about gold than I do. But if Donald Trump has told us that gold's going to 20,000, people go into gold because of fear. And as it starts to go up, remember, this reset from wherever it is around 5,000 right now to 20,000. It's going to happen in one day, just like it happened in 33. When that happens, all of a sudden, if you're there heavily invested in gold, you might have a hard time getting out of your position. So my recommendation is look at silver and look at copper, and I think you should be putting more in silver than in gold. The experts that I've been reading about say 10, depending on your risk capability and the amount of money you have, no more than 10 to 15% of your assets should go in gold. Now, silver is an entirely different animal. Silver has been greatly, greatly, greatly depressed. Over the decades, it's usually been 16 to 1, 16 silver 1 ounce coins for 1 ounce of gold. Well, now the ratio is 80 to 1. And Donald Trump has just declared that silver is an absolute strategic asset. Why? Because he's releasing almost 6,000 patents and has the plan to do exactly what we did after the financial collapse that we had following the Civil War. We did what? Just what he's doing. We put a 50% tariff on England, and that meant that we had to buy American-made goods. That meant that we basically developed the Industrial Railroad, and the Industrial Revolution, the Transcontinental Railroad, the assembly line, and America in 34 years became the wealthiest nation in the world. What's he doing right now? He queued up in term one, the Chevron deal, giving us access to nearly 6,000 patents. And now what has he done? He's leveraged nations around the world with fair trade agreements and with tariffs. And what's he done? He's put us in a position where the money is not flowing to China now, but flowing to the United States. And he has pledges for nearly $20 trillion to build new factories. And what's he also doing to make that happen? He's removing the regulations that were on the books that kept us from building our infrastructure. So he's making a promise to any investor who comes in, you bring $1 billion into this country to build a factory, I'll get you the permits within 90 days. So this is the strategy, a soft collapse orchestrated by the strategic reserve that Trump is putting into position, coupled by a rapid growth from the United States of America. Now, there are those who are saying, well, he promised to bring jobs and so forth, and it hasn't happened. Folks, it took us decades to get here. Our collapse really started to accelerate when Jimmy Carter came into the office in the 70s, and we basically ceded manufacturing to China. It's going to take 2 or 3 years to get these factories built and to get this economy rolling, but I'm telling you, he's going to keep his promise. America is going to be greater than ever, and you're going to be unbelievably wealthy. If you invest in the things that we're talking about here, you're not going to suffer from this. You're going to come out on top. And there's one other thing. I don't want you to forget the God factor. So I was talking about paying down our debt through the various things that Donald Trump is going to do. But in another segment, we're going to talk about NESARA. And it's entirely possible that a large portion of our debt might be declared illegal. And when we're done between those two, we might not have any national debt. Think of what that's done. And what's Trump saying right now in the last couple of weeks? He's now positioned us to go from the Internal Revenue Service to what? The External Revenue Service, which is going to bring in massive amounts of money, and to go to a 14% flat tax is what's under NESARA. And so your tax structure is going to change in ways that you can't even imagine. You're going to have a lot more money in your pocket at the end of the week when you get paid than you do right now. So anyway, on with silver. Here's what I have to say about silver. It has been declared, no, we're still on that slide. It's been declared by Donald Trump that it is a strategic mineral. It is absolutely essential to manufacturing, and he's even called it like an endangered species. So he's put absolute spotlight on silver. And what I think that's going to do is we are having shortages of on-hand silver, meaning already been produced and ready to be shipped for whatever. And as the supply of silver fluctuates, the price is going to fluctuate, because right now, the days of having silver mines that just had big chunks of silver laying around are gone. Silver is a byproduct of mining for other minerals. So basically, silver prices are going to fluctuate up and down, meaning that silver is a semi-liquid asset. So if you get into it and it's going to go up, look at that 80-to-1 cost ratio between it and gold. Look at the fact that it's strategically essential. It's going to go up, and it's going to go up and up and up and up. But it's also going to have fluctuating price range because of supply and demand. And the same thing will be said for copper. So let's go back. Not every collapse is the same. In 1929, people thought copper was going to be a very valuable industrial metal. It wasn't. It was an absolute catastrophe. Why? Because we didn't have the strategy to rebuild that Donald Trump is bringing us. The auto industry crashed by 75%. Home building stopped. All the uses that we would have had for copper were basically not in play. But right now, the number one metal for bringing America back to the Industrial Revolution is silver, and the number two metal is copper. So basically, do your homework and make your own decisions. But I'll summarize what I said. Small portion of your assets in gold, 10, 15% at most. Invest in silver as a semi-liquid investment, and the same thing is true of copper. Let's go on down, and now we're going to talk about farmland, and I'm going to tell you some things that you may not know about farmland. So basically, if you can invest in anything that is an absolute necessity. And what are the absolute necessities of the world? Land. And land what? Because it produces food. And so you've got energy, you've got food, and you've got things that are absolutely essential. But here's what they're doing to you in the farmland that you may not know. And this will maybe fit into the strategy that you're going to execute. Chinese companies, billionaires all over the country, Bill Gates, etc., they're all buying millions of acres of farmland. I think most of you probably know that, but do you know what they're doing with that farmland? When we get through this financial reset, we are going to be in a position to basically say that the 2,700 page list of laws that have been illegally imposed upon us are null and void. Our politicians by the droves are going to be removed from office because we're going to find out they were not elected legally. They are here and they are enemies of the state. When that happens, we can come in and change laws. And we can fix things that we don't think we can fix. So what are they doing with the land? They're buying that land, that agricultural land, and then taking it out of production. They're buying it because the farmers have first rights to the water, which is the centrally most important thing in the entire world for the continuation of mankind and of every species out there. And they're basically doing what? They're turning the land fallow, and they're selling that water at a 10x profit to urban centers in areas that are suffering from water shortages. I mean, it's unbelievable. And those cities are demanding more water out of those aquifers than our farmers were, leading us to something that I'll be talking about in another show, and that is the strategy. If you think what they did to us with wars was bad, then look at what they did with COVID. That was even worse. And now what they're trying to do is create a worldwide global famine by putting the focus of the green movement on carbon, when the real problem is a shortage of water that's going to lead, if we don't do something, to a worldwide global famine. So I'm going to be doing a show on that. But anyway, I think you need to know that as you look at farmland and as you look at necessities. Those are the things that are important. You got to have energy, you've got to have water, you've got to have land, you've got to have natural resources. That's why Trump has also put into effect the National Production Act, so that he can make sure that we get all the minerals that we need and we get the factories going and we can restore America. So the real crisis behind climate change is water, not carbon at all. And I'm going to be exposing it in some real detail in coming weeks. So let's go on down and just take that and put it in perspective. And if you go out and buy your own piece of land, that's one thing. But if you're invested in a company through stocks, then you need to consider what you're going to do there. So let's go on down to the next thing. We're going to talk about necessities versus luxuries. What we're looking at right now is a situation where people can't afford any luxuries at all. So whatever investments you make need to be in necessities. So excuse me, an unprecedented number of real estate companies are going to be basically going under, announcing store shortages, closures. So think about all the big department stores that are basically the anchors for these shopping centers. They're announcing store closures. Look at even the pharmaceutical companies, CVS and Walgreens, are closing stores around the country. What happens to a small town when their pharmacies close? So you need to understand what's happening, and you need to put your money in anything and everything that is a necessity. These are companies that are household names that are going under. It's partly because of online competition, but it's more because people can't afford anything except the bare essentials right now. The middle class is under assault. People are struggling to survive, and all we can afford is necessities. So keep that in the foremost of your mind as you're thinking about what you're going to put your money in. That relates to a stock, that relates to land, that relates to virtually any investments you're going to make. Is it essential or is it a luxury? If it's a luxury, you don't want to be in it. There's no glamour in investing in necessities, but there is stability. There's safety in companies that make things that are essential and things that solve real world problems. So let's go on down. I hope this is helping you. Now we're almost done with this presentation, but I need you to come back tomorrow, because timing is important. It's not only knowing these asset classes, but it's knowing where to put your money, when to take your money out, and how to redeploy your money in order to continually be growing your portfolio. So BRICS, most of you probably know what that is. That's the consortium of BRICS, Russia, India, China, and South Africa, and now a whole bunch of other nations that are putting pressure on the United States dollar by basically creating a currency that is backed partially by gold. But what the people don't know, and we're going to get into this in another episode. Hey, folks, spoiler alert, the United States has more gold than any other nation. And when it's time, when Trump is ready, we'll go on a gold standard. Don't worry about it. Now, this next picture down below talks about foreign currencies, and I need to bring you something from history. If you are the world's reserve currency, your currency and the overall value of your assets is going to drop significantly more than many other nations. Why? Because America, in this instance, has been allowed to run its printing press 365/24 for years and years and years, inflating, or I should say deflating our currency dramatically. So what you may want to do, I'm not going to give you recommendations. There's too many things going on. You need to wait until you get to the piece that I talk about on geopolitical realignment. But think about investing in other nations. Same asset classes, stocks, real estate, mining, whatever, in other countries that fit a profile, that haven't been in a war, that have good trade around the world, both domestic and internationally, that have stable economies. So basically, you have to look at the international market as well. Don't just put all and think you're diversified if you have a basket of items that are invested only in the United States. For those of you who have the money, look at those same set of investments, but internationally. But what we're going to talk about tomorrow is not everybody's got the luxury of having enough money to invest in all those different buckets. So what we're going to talk about is the strategy for the middle class. Where do we put our money to make it safe, to allow it to grow, to come in and out of positions, and to progressively come out of this with more and more wealth, and being able to then move up to where we can invest in other asset groups in other nations. So I'm going to give you a growth strategy tomorrow for the middle class. So basically, to sum this slide up, the dollar is under pressure. We're no longer going to come out of this as the world's reserve currency. We're not going to be the superpower of the world. It's going to be Russia. It's going to be China. It's going to be the United States. And bonds are going to be under attack. That's along with commercial real estate, in my opinion, the two most vulnerable segments of the economy. So I would really look at getting out of the bond market. It's absolutely going to collapse. And in the next week or so, I'll be doing a little piece on the Japanese carry trade and how that is going to be the thing that probably triggers the collapse of the bond market. So that's another area I'm not an expert in, but there are people out there who are talking about it who really know what they're talking about. So that's basically it. And what we need to do to get into this in detail is wait until we get to what's going to happen geopolitically with the restructuring. I'll give you just a little bit of an idea. So here's what's happening. The whole world is changing. Power is going away from China, and it's going to go to other nations in Asia. And that population between China and India and all the other nations, that's 80% of the world's population. So America has to do something to defend against that kind of power building in Asia. That's why Trump is doing what he's doing in Venezuela. He has a strategy for the Western Hemisphere. And then basically you've got Africa. Everybody's going to be competing to get into the wealth of Africa. And then you've got Russia. So basically you need to understand, if you're going to go into the international market, how the world is going to change, geopolitical, how the power is going to shift, and therefore where the best places are for you to go to put your investments if you're going to invest internationally. Let's go on down. And we've only got a couple of slides left on today's presentation. And we're now talking about the reset of currencies. And I know there are people out there that say, Larry, there's not going to be any reset. Well, Donald Trump himself has said several times there has to be a reset. We have to have two things: peace around the world, and we have to have parity of currencies in order to be able to have the wealth transfer. So basically, it comes down to God's plan. God doesn't plan for the world to be at war forever. He wants to bring peace and prosperity to the world. And it was Eisenhower who said, is there any man, any woman, any child that doesn't understand the central cause of war is lack of parity between nations? So with that, I'm going to tell you the things to look for that are going to signal you when a currency is ready to be reset, when it meets all the standards to go on the Forex, when it's considered to be a stable economy. They have to have a stable, growing economy. They have to have reserves, assets. They have to have a stable government. They have to have no current military conflicts. They have to have an abundance of natural resources, adequate infrastructure, manufacturing capability, international trade agreements, domestic markets, undervalued currency, and food and water stability. No nation can be stable if it can't feed its people. So after years and years of waiting, I believe that we're on the threshold of the revaluation of the dinar and the revaluation of the Vietnam Dong. It was America that collapsed these nations. And according to the prophets out there, the first currency to go is going to be the dinar. And let's give you a little practical background. Before we went in and invaded it and collapsed its current currency, it took $3 to buy one dinar. Why? Because they have a bundle of oil. And right now, what are they doing? They're now shipping the oil out, but guess what? They're refining it, and they're now opening their minds up. They're going to be one of the wealthiest nations in the world. They're ready for the reset. Now, for those of you who may not have enough money to invest, like I said, in all these different buckets, and you don't believe this reset's going to happen, okay, well, when it does, and I believe it will, then there are a couple of other currencies out there that are going to be valued, but they're not ready right now, at least according to my opinion. One is Venezuela. Venezuela is sitting on the largest proven oil reserves in the world, plus it has a number of other natural resources. It's going to revalue, but it can't revalue until it's stabilized. It is a narco terrorist organization. It is heavily controlled by China and Russia, and Trump is there for a myriad of reasons, too many of which for us to get into right now. And the second is Zimbabwe. And what happened in Zimbabwe, it's very similar to what's happening right now in South Africa. When you take agriculture away from those people who know how to farm, who will not have a productive farm, you take away the means in many instances for the stability of the economy. That's what they're doing in South Africa right now. That's similar to what they did in Zimbabwe. So when we see Zimbabwe stabilize, they're going to be the next currencies to go. You're going to see the Zim go, and you're going to see the Venezuela Bolivar, but not now. So keep your eyes open. If you miss out on investing in the dinar and dong because you don't believe there's going to be a reset, well, then when these happens, then you need to start looking at the other two currencies because they will revalue as well. Both nations are absolute treasure troves of wealth because we're going to go to a commodity-backed system, and they have massive amounts of minerals in their land. So basically, that's for the future. This takes us to the end of this presentation, and please come back tomorrow. Let's go to the next slide on my book, and we'll kind of start to wrap up. So I've got an announcement to make. Probably as soon as next week, I'm going to be starting to put up another thumbnail here that's going to show you the cover of my new book. We're just about ready to launch it. I haven't set the exact date, but I think it's probably going to be sometime around the second week of January. And please, I don't mean to be sounding like I'm begging you, because it's not for me, it's for you. But as we go through this, if we don't learn the lessons of how we got here and how America suffered a coup at the hands of Venezuela and the global financial elite and almost totally fell from power, we're just going to repeat that process. God gave me this book to let you know what made America great. And as we go forward, we need to know how we rebuild America. So the combination of this book and the next book will empower you to understand how we restore this nation, how we keep it. And I wrote them specifically at about a 6th grade level. So they're ideal for you to share with your children and teach them the things they need to know. Make yourself a hero. Make yourself the person that teaches your children what they need to know. Take that power away from the schools and away from the media commentators and away from Hollywood. Put it in your home. We have to restore the family unit. That's the basis of every great nation. So with that, get you ready for what we're going to talk about tomorrow. We now know the asset classes, but now I'm going to tell you what to invest in pre-collapse and then what to invest in as the collapse occurs so that you can be building wealth as you go along, investing. But you won't be able to do that if you don't take the advice from this segment and get yourself ready for what's coming. I hope this has blessed you. We'll be back tomorrow to finish this segment, and then we're going to be doing all kinds of things on finance from now till well into the middle or late part of January. So this is just one piece. There's a lot more coming. So with that, be blessed. I hope this has blessed you.